Everybody, good morning. Good morning. Happy Tuesday. Welcome back. Daily Profit Plan. It is Tuesday the 23rd. Let's kick things off. A little screen share on Zoom. Say good morning to everybody. Chat's open for everyone. All right. Well, uh, semiconductors starting to flinch. Pointing this out this morning in Telegram. We are down about $40 pre-market, close to 5%. So semiconductors down. That is showing about 6.3% to the downside. That is translated into some sell-offs in the indexes. Qs down quite a bit pre-market. Nasdaq futures down 3% already. I looked at the sell-offs here. If you remember on Friday the 5th, when the market was down, we had almost a 5% correction just intraday. That was a bloodbath for the Nasdaq. So the market was down about 4.97% from close to close. And then that fateful wild Tuesday that we dealt with, the high-low swing was about 5.4%. So Nasdaq is potentially up for like a 5% swing. I mean, it could be worse, but that seems like, wow, what a crazy day. And the markets kind of contain that as like, well, NASDAQ, maybe no worse than 5%. S&P kind of puts us around that 2.5 to 3%. So similar days, price action wise, go to that close to close. I mean, it wasn't that long ago. We're talking like 2 weeks ago now. That close to close was there's a 2.86% sell off, and the market closed near the lows, but 2.6 from close to close. And then we had that 3+% swing, but it came back and finished inside the expected move box. That close to close, well, there's high to low swing of 3.25%. And then the crazy part is close to close, we only moved about 20 points. But having a 2.8% sell off, a 3.25% sell off, that's in the cards for potentially our volatility type move on the day. So going into today, close yesterday was 7472. We had our, intraday sell off. The market was pretty calm for the remainder of the day after about 10:55 a.m. Eastern time, and it settled, right around that 70 to 74, 72 handle. Coming into today's live trading, we are down over 100 points from yesterday's close, 7366. We are in negative gamma territory. As I posted yesterday, as long as we stay below 7,500, the pressure is to the downside. Negative gamma is the volatility regime. And again, it could be temporary, but it's going to be in more volatility. It doesn't guarantee, bearish direction, but we are going to see some swings. Okay. So some levels that I'm noting today. Interestingly enough, Thinkorswim is showing 5609 today, while Tasty is showing, let me go SPX here. I just got filled on a pre-market trade for SpaceX for 150, by the way. So there goes your IPO price. IPO is right back where we started. SPX, 42.3. This seems very, very low. June 23rd, 42.3 on Tasty, 56.09 on Thinkorswim. Okay. So I'm going to up this to 5609. That's the higher of the two brokers. We are going to have a gap adjusted move today. So we're likely going to see this 56 points. I mean, my calculated box is going to be taking the close from yesterday, which is going to be extremely high. So going up around 56 points, that is saying that the market is going to struggle to get, back to 75.30 today. Okay. Which if we're opening up at 73.66, that seems like a long, long ways away. Could it still happen? Sure. But unlikely. I mean, that's going to be a super, super low delta, I would imagine. We take the gap adjusted move, we're trading around 73.66, go another 56 points lower, and we're talking maybe around 7,300. So some key levels for me around 75.35. If you want to write these down, 75.35 and 7,293. And so I'm just going to round each one of those up. 7,240. I'm sorry, 7,540 and 7290 there. Those are my, pretty high and pretty low levels that we shouldn't see price go beyond today. But with the negative gamma, the one thing that is really important on a day like today is managing risk. Managing risk is crazy important today. Why? Because I don't know if the market's going to have another 2.5 to 3% sell-off in the S&P and a 5% sell-off in the Nasdaq. I don't know if we're going to have an outlier day. I also don't know if the market's going to give us, this big expected move and the actual is less. But right now, only a 56 expected move or only a 42 expected move almost seems like it's priced too low, right? But we have seen this before. I mean, we've been trading zero DT a lot. We've logged, hundreds and hundreds of trades. It is also possible that the market has this just flush and gap, and the market does little to nothing for the entire day. Is it volatile? Sure. But does it move anywhere from kind of open to close? It might be very quiet today. And if it's plus minus, 42 on Tasty or plus minus 50, 56 on Thinkorswim, but it stays within that, we have a very contained move despite a nasty sell-off on the day. I mean, we're down 1.5% of futures. We're down 1.5% S&P right now. We're down 3% in Nasdaq. Like, that's a big, nasty move. On the tape, it looks really bad. But intraday price action wise, I don't know. I just know we're negative gamma. And so 7290, 7540. I want to see what those deltas are. I might try to let price come to me at some of those levels. Is it possible I could take like a 5 or 10 wide and get 1-to-1? Maybe. Could I set a low risk, high reward iron butterfly and try to incorporate, 70, 80, 100 points of movement today? I'm going to try. I might do a double up trade on XSP that maybe I, plan a 10 wide or 12 wide or 15 wide and risk maybe $2, $3 to make 3 times that. I don't know if it's going to get filled, but I might try it. Okay. But we'll see. But negative gamma is price would have to overtake 74.90 for us to get back to positive gamma. The bulls, as I said yesterday, with the end of the quarter, so we can go end of the quarter, which is Tuesday, and end of the month. Go to the chart. So negative gamma below 7,500. And we are live down here. So, is it possible we bounce off of this 73.20? It's like that's a big put wall. And again, this is not zero DT. This is out to next Tuesday. So, where are the key levels? Well, if we bounce at 7,300, we bounce off that. Okay, we stay in this range, but we still are in negative gamma all the way to 7,500. If we break that structure and break that put wall, this could accelerate the move to the downside. You have to remember the VIX was at 15. Now it's at 19. Are we going to see the VIX slip back into 20 plus? Maybe. Okay. How about some levels to the downside? There's not a lot of action here, but this also shows like the softer underbelly of the market where if we, crack this major structure, it might just be what do dealers do in a negative gamma environment? They tend to buy puts. Okay. Projected news-wise, there's flash PMIs. Is that for US too, or is it just Europe? I know Europe had like most of the PMI numbers this morning. Is it US as well? Let's go Forex Factory. So we do have, I guess, yeah, for the 9:45 a.m. So we have flash manufacturing PMI and services PMI. Okay. Medium impact on the morning. It was all Eurozone came in mixed. Some expected, some higher, some lower. Revisions, some higher. But yeah, 9:45 a.m. Okay, fine. Most likely this weekend, PCE, we're probably going to see an elevated print on PCE because you're going to have most of the oil shock from last month. Oil prices, 73.51. Barely moving. Gold is down. Gold is down. Are we breaking fresh lows on gold? Not yet. Are we going to break fresh lows on gold? Maybe. We're below the 200-day moving average, right? Can we hit symmetry down here? Can we hit channel lows? I'm prepared for gold to possibly hit like 3,500, 30. If it hits 3,000, that's a massive, massive correction. But I would kind of, happily accumulate at a 45% discount. I like the upside. If you can buy gold at a 45% discount, I like the upside. Silver, also sliding lower. This is a high, low, lower, high, lower, low. I mean, silver, $40. Seems like, oh my gosh, I can't believe I bought silver, but we'd be down about 70%. I'll take that discount. Does it take years to get back to all-time highs? Well, if it does, there's a 200% move. I'll take that gain. And I'll sit on it. And there's no time. It's like, just let's see if silver has a rally at all-time highs again. Could take 5 years, could take 3 years, could take 12 months. But I'm going to accumulate. Okay. What else? Bitcoin, not cracking fresh lows, but I would say is vulnerable. If the markets sell off, we have more risk off trading in Nasdaq and S&P. It's hard to believe that Bitcoin is going to stay at 60K. We're probably pushing lower. Corrective symmetry, 32,000. Let me know how to get a hold of you. I have a question. Send me an email. chrispulverpub@gmail.com. chrispulverpub@gmail.com. Easy email. Okay. Tons of people on a up day, not many in a down day. Yeah. Well, I mean, who knows, man. I mean, I'm going to be here every day regardless. So you can't let a down day, you can't let I mean, look, I have no idea what's going to happen today. Are we about to see a 3% sell off? Maybe, right? Are we going to have a 3% correction in S&P, a 5% correction in Nasdaq? I have no clue. What I can do today is manage my risk. And so how I choose to do that could be an iron butterfly, could be a, iron condor that I let price come to me. Just let price be price. This is going back to 0DT today. I mean, if you want to take a tighter range, this will be an interesting read. Here is the smart range based on current price. There's a little bit of pricing skew, but if I set a, 5 wide, I get $2.50 credit, or even better yet, maybe I put $3 credit. Maybe I put $3.50 credit, right? And if price stays above this or below this, I'm risking $1.50 to make $3.50. I can set that trade up. It's like, yeah, I accept the risk, but it's small. If I win, I have a 2x type win. I mean, I accept that trade. If I'm right, we get paid well. If I'm wrong, I'm risking something small in the day and I survive and come back and we trade tomorrow. If we have an outsized move, if we have beyond expected move box, well, we know what that bounce back typically looks like the next day. We've seen it before. So today's the day to manage risk. Not get greedy, not get silly, manage risk. Okay. Most likely, I'm looking at, I might set a similar trade, like I just said, like iron condor wise, but setting like $3.50 credit. Try to get that versus risking, $1, $2.50. I might set an iron fly that's, I mean, I'm showing plus minus about 60 points. So if I can incorporate like a 10 wide that gets me $7.50, $8 credit, I have low risk, higher reward, and I can incorporate maybe 60, 70 points of movement today, one way or the other. Pete says, I think it started. I mean, it all started last night. I mean, all the sell off was like 9 p.m. Eastern time. So, SpaceX looking great. No, it's crap. SpaceX is down to 150, which is the pre-market or the IPO price. How quickly that lasted. I mean, you basically had 3 days to make money on SpaceX. IPO price ran up for 3 or 4 days, giving it all back. Is that a huge surprise? Is anybody surprised? Come on, man. Nobody should be surprised. This is what IPOs do. They get really exciting for a couple of days, that had a good showing, and it gave it all back. And now we see where the trading is. So if it gets worse, oh yeah, that's going to suck if we crack 135. That's where a lot of the banks are sitting at break even. So there's probably a bid in there somewhere. I think the 150, 135 handle, there's probably a bid in there somewhere. I was on a show yesterday that I put in a like a 240 debit or 250 debit for a 130 by 135, and then a similar one at like I think 110 by 120. So I'm gonna play a couple of levels in addition to having my ratio spreads that are all the way down to like 105 or 75 strikes. So yeah, zero surprise. Exactly. It's not a surprise. Nobody should be shocked that, oh my gosh. And I'll say this. This is the granny indicator. My fiance's grandma, again, right at the top, said, "Are you doing anything with SpaceX?" I'm like, "Well, we're coming back to 150." So there's your trade. Just like in silver, when she said, "What about silver?" Literally the day before the big top. So funny how that works, isn't it? Anyway, I still have some skin in the game with SpaceX. I'm looking at some find risk trades around these lows, but the bigger trade for me was pulling in that ratio spread credit and giving that like 30 and 50% correction levels. I'm willing to own shares, but I'm willing to own shares at a huge discount. So we'll see. Okay, Nasdaq 3% on the day to the downside. Futures and SPX 500 CFD down about 1.5%. We'll see what happens in 10 minutes. We're in a negative gamma environment today. I think it's all about risk management. I'll probably do a combination of, do I like this iron condor? I want to see what the premiums are at a 7540 and a 7290. And I also might, to be a little bit safer, it's like, let me measure like 3% to the downside. If we're going to go from close to close, 3%, I might be looking at that as my put spread. I also might put a very inexpensive butterfly down there in case we do have a 2.5%, 3% sell off. Okay. But I think today it's like manage risk. There's no reason to take a lot of risk today. I mean, it's very difficult to have big gaps and know what the market's going to do intraday, because it's either we have a close yesterday, open today, and it's a massive gap lower, and the market goes next to nowhere. That's one scenario today. Market doesn't do anything, but all the damage is done overnight. The other scenario is we open way down here, and the market spends the entire day ripping back up to try to close that gap. Very directional today, isn't it? There's your 0 DTE bull saying buy the dip and going nuts and actually driving flows higher. Does it get us into positive gamma? I don't know. Does it get us above 75.40? Doubtful. It shouldn't, but it might be that type of move on the day. We have a close to open. Does it just keep pushing the market down? And this slide continues to accelerate. All three of those situations can happen. Somehow I need to be prepared and planning today to have like, how do I trade if any one of those three happen? I don't know what's going to happen, but I have to plan for it. Okay. All right. Okay, we have about 8 minutes for the open. Semiconductors, like I said, there was a flinch in semiconductors. This is down about 6%. So there's yesterday's close. We are down about 6% pre-market. Now look at this on the bigger picture. I woke up this morning like, oh wow, that's interesting. This is a $40 gap, but it's a $670 instrument. Look at the daily chart. Compared to this March low and this recent high, this is really nothing. So this pullback is not even a 23%, not even a 30%, not even a 38%, not even equilibrium. It's nowhere close to that. But I did mention this 3-drive pattern. 1, 2, 3, 4, 5. So if we're breaking the structure, I expect to see some type of A, B, C correction. And from there, I'd be interested in maybe the bigger swing, which would look something like this. That'd be X, I guess. That'd be X, A, B, C, D. Look to see if there's a harmonic pattern and maybe consider getting long around like the 50618 zone. To me, that's where the bid is at. That's where I start deploying some risk defined options and see, if the market's going to go back up and, retest the harmonic merge, or maybe even go back and retest the high. What type of damage does that do? I mean, I find it interesting that the semiconductors are down about 6%. Okay, 5.9. Let's just round it to 6. So 6% X SMH, which right now is translating to about 1.5% S&P, and we're looking at about 3% NDX. Okay. So do the math. And I'm not saying this is true or perfect, but basically we have like a 4 times multiplier. So 4 times multiplier on SPX and about a 2 times multiplier on Nasdaq. So if we get a 20% correction on SMH, that's going to translate to possibly a 5% correction in SPX and possibly a 10% correction in Nasdaq. So SMH 20% correction. Could we get a 5 to 10% correction in the indexes because of the concentration, because of the weight? Possibly, yes. The boom of semiconductors. Is it a bust of semiconductors or is it a buy the dip of semiconductors? I don't know yet. That's why I'm not getting stupid aggressive on this, but I'm interested in looking to do a defined risk trade, probably between that 50618 zone. Okay. And most likely, I like this trade too. If it's a 50618 zone, looking for a bid, or if it comes all the way back down into this area from like the 786 to the bottom in March, I would still consider, trade 1 here, trade 2 here. If I'm wrong on both, I accept that risk. If I'm right on both, awesome. If I'm right on one, lose on the other, we'll still make money. So it's just mapping this thing out. No, we've already got our defense levels in. Let's see what happens. I mean, we've done that stuff for 20 something weeks, and we've come out profitable a lot. So let's see how the market wants to fight. Let's see if we get filled. Right? I mean, we got participation trade in. Let's see where that break even. Let's see where those defense trades are at. Our levels. Let me look at our. Did this on XSP. So XSP pending order 731. I mean 7,300 is like a low today. Well, we're most likely going to get filled. Gosh, this could be like a really high credit on. I hope it is. If we get filled on a break even level, I feel like 750. So break even level 750, 749. It's like I'd love to get filled at a better than 50-cent credit. If we're down this far, I mean, we're essentially opening to like 736 today, 737. I'd love for this to get filled at like 60, 65, 70 cents. And again, the probability of profit's not great, but the loss on the trade would be smaller. If I get filled at 50 cents, I'm going to be kind of annoyed. So if we can get a better fill on that break-even position for energy and options, that would be fine because we just have less risk in the trade. And then after that, we have the 740. That's roughly a 7400. We're trading at 7360 today. So like this one also has a chance of getting filled. That's our 50% defense. We have the 100% defense as well. And we'll see. So we'll keep an eye on it. Okay, what do we have? 2 minutes for the open? All right, so I'm going to be moving pretty quickly here, not by choice, not by talking too fast. It's like I just want to see what the levels look like. So if I'm assessing my credits from a 72.90, if I'm assessing my credits from a 75.30, I mean, again, do I think there's upside risk today? I mean, if Trump truth socials and opens his mouth and tweets, then yes, there's upside risk. But if the market's selling off because of tech, not Iran, then I don't know if there's going to be really a quick recovery outside of if the market goes up today and just tries to recover into this sell-off, okay, but do we close above like 75 and change? Probably not. I would hope not. I mean, based on these calculated moves, I'd hope not. So I want to see what this delta is this morning. Okay, Pio says cancel re-enter. I mean, maybe. I'll take it. If I cancel the trade and re-enter, it's like honestly, maybe it feels at like 50 something cents. Like I'll take the 50 cents, but if it's truly showing like 70 to 75 cents, it should fill me at a better price. I mean, last week on our Flashpoint trade, we got filled a Flashpoint for a gap up in a positive credit. I mean, I went from like a 40% price target to a 65% winner. So we got slipped up. So I mean, if we're down below that, we should hopefully see like that first available price is a higher premium. We'll see. Randy asking, so yeah, Tasty Trade was lower today. Tasty Trade's like 42 today. Tasty Trade is 42 today. 42.3. Thinkorswim was 56. One of the rare occasions I think. Let's see if Tasty's adjusted. Look at that. See that? Look at that crap. SPX just adjusted to 51 points. Is bouncing all over the place. All right. I got filled for engineered options at 73 cents. That's good. That's what I mean. It's a shitty position, but we're only taking about 27 cents of risk versus 50. So the 750749, that's a break even trade. We got 73 cents credit on that trade. So now my max risk is 27 cents per contract. That's not too bad. Even if it's a loss, I can stomach that because we're getting way less risk. So that's again a fortunate fill. Let's see what the defense does to kind of help us out. If somehow we can, carve out a comeback and get above that strike, then that's a nice winner. All right, let me go SPX today. And now all of a sudden we have a live adjustment. This is 53.3 on Tasty. This got filled 7-4. So we have now defense kicking in. Our engine options getting filled. All right, so EGO trades filling. Participation filled at 50 cents credit. Break even level filled at 73 cents credit. Okay, just updated those. So engineering options, participation filled yesterday. Break-even level filled today for a higher credit. Defense kicked in with a 50 cents credit as well. We still have 100% defense. Let's see what happens there. And obviously, I'd like to see the markets respond to a 50 and 100% defense level and hopefully get us paid in some net profits there. All right, 75 and change. Ugh, look, this is what I consider. This is a 1 delta. 7,500 is a 2 delta. You're not going to get any premium on that trade today. What is my plus minus on the day? If I go 7,365, plus or minus 51 points, I'm going to give this market some respect and go like 7,465 on the call side and 7,265. Okay, so right now, could I get like $95 credit on this trade? Risk $500. That's probably not going to fill. I'm probably going to have a better chance of trying to get filled in XSP. But I would risk $500 to make $9,000 today. All right, I'm going to put this trade in. It's like I said, likely it's unlikely to fill, but here's a hopeful fill. XSP plus or minus 5 points on the day. I'll take the 60 zone. That's right where we open 7360. I'm going to go 15 wide and try to get filled for like 12 bucks. Cover 120 points on the day. So let's go 15 wide. So 751 and down to about 721. That's 15 wide. Give me $12. I'd risk 3 to make 1,200. I'll take that trade. Now, I'm also willing to give this trade, even if I showed $10 credit, I'm risking 500 to make 1,000. I just need prices stay within about 100-point range. I'm going to put it at 12 and let this just hang out. I'm risking 3 to make 12. Okay. Is it filled? No. What does price have to do to fill it? We have to have some crazy direction. Okay. So we're at 7360. You can see here gamma wise, we have a pretty wide level, 7,400, 7,300. Gamma's pretty wide. The other trade I might sprinkle in is this is kind of the dynamic range for the day. Setting a trade in here for a smart credit. Let me go. Let's get this reading here. So this is around 7,437. So I'll put a smart risk. So 7440 and 7295. Okay. I'm going to try this. This would be for daily profit play, and I'm just going to manage risk. So 7440, that'd be my call spread. If I go 10 wide, what I'm going to try to do is incorporate more reward than risk. So I'm going to go 10 wide and ask for like $7, 750, something like that. 7440, I'll go 10 wide, and then 7295, I'll go 7290, 10 wide. So right now you can take the trade for $2 credit, risking 8 to make 2. That's like a very standard daily profit play. We do that stuff all the time. Is that a safe trade? I mean, can be. It's just not incorporating the expected move box. Expected move box is 7528, which is gap adjusted, all the way down to a 7310 because of the gap lower. So I'm going to put a trade here. Let's try, $8 credit, risk 2 to make 8. I accept the risk. So if we breach, this level, but come back and bounce and close below it, or I'm sorry, if we close back above it, I mean, let's take a big fat winner today. So I will try. So I'm going to put this trade in for $8 credit, risking 2 to make 8. And that's using the dynamics of this expect to move low, gap adjusted, and our, more real time, like 7435. So using this, reading on current price, current volatility, and we'll see if the market kind of stays contained here. Again, this trade may not fill for this type of credit, but I'm going to keep the risk very small today. So I'm doing low risk on SPX Iron Butterfly. I'm doing low risk on XSP Iron Butterfly. I'm doing low risk on an Iron Condor SPX. So I'll watch. Flashpoint, we'll have a trade here in just a couple minutes. So if we have an intraday sell-off and there's more pain, again, oh gosh, because of the close, I might have to look at the readjustment. Do we have morning orders? We do. Look at your numbers. 7404, like we're already through that level. Okay, hang on a second. I'm gonna have to make an executive decision here because of the gap lower. One second. I am going to pass on. Gosh, just again, the reason I would pass on today's flashpoint is because it's based on the close yesterday, which was 7472. The market's gap lower. We're already at the tsunami pain point. So I'm going to pass on today's trade for the reason that we would be filled on both of them already. And if there's any intraday selling off, if the market sells off at all today, it's just not a day that's likely to come back. So I'm probably going to pass on today's trade. The tsunami one is tempting. It'd be a 7375 by 7380. So basically, if the market by tomorrow has any fight in it, the tsunami level is a relatively straightforward trade. Would I take that as like a 0 to 1 day dip and the market rallies up? Possibly. But yeah, I'm just going to hold off right now. 738. I just got the alert. So pain point 7341. All right, I'm going to put in the, hang on a second. New alert. 7341 is a pain point for tsunami. I'm going to put this trade in. I'm going to skip because we're about 60 points lower. I'm going to skip the flash point today. I'm going to go straight for tsunami. I'm going to see if this one gets filled. So I'll make a note in Telegram. Trade update for today. For today's levels. I should say due to today's larger gap down. I'm going to play the tsunami level only. Okay. So I'll take my 2 DTE, which is the 25th. Follow the tsunami level on SPX. See if this one gets filled. 7355. So go out to 2 days. 7355. We're trading at 70 right now. If we go a little bit lower intraday, this one has a good chance of getting filled. So 55 by 60. See if this will fill for a 265 debit. Good for the day. 265 for the day. Alert says 325. I'm going to go after a 30% winner. And then set the stop that I will cancel in the bracket order. Or the yeah, I guess a bracket order. All right, so 265 debit. Will it get filled? Pain point there is going to be around 7340. That could get filled. I mean, if we hit 7300 today, if we hit the lows around 7293 today, that could get filled. So keep an eye on that. But going after a 30% winner, see if we get some fight in this tsunami level. I've got to throw them in. They're pending orders. I'm not looking at high risk trades on daily profit play today, so I got pending orders. I've got a double up pending order. I've got a daily profit play pending order. I'll put those in a sec. But since it's quick 10 minutes in, here's our flash point level. I'm just going to trade the tsunami level today, not both. Okay, pending order. And I can sit for the day. Okay, daily profit play. Coming in hot. I'm going to do the iron condor that's working. This one here. Setting a lower risk iron condor today. Today's the 23rd. 7440. 7465. That's not right. 7450. Seven two nine zero 7280. Okay, trade is in there, pending order, and then double ups. I'm putting in the XSP trade. That is a iron butterfly. I'm going 15 wide. So I'm risking 3 to make 12. Okay. Price has to move or else I don't get filled, but I'm not taking high risk today. Keith, I don't know what you want me to say, dude. You can talk to 500 people every day and they can tell you exactly why they come back and see me every single day. Why is this over your head? I don't know. Because you don't trade 2-3 leg options. You don't trade iron condors. I mean, how many trades have we logged together in the last 2 years? 15, 1,600 trades. Win rates 86% across all my services. So you do what you want, dude. But if you come back here, you'll see you're in the right place and we learn, we grind, we trade every single day. The one prerequisite I have for any trader out there that's following me is, can you navigate your broker platform? Because if you can follow this XSP, expiration, can I find this call, this put, this call, this put in the trade? You can trade, dude. Doesn't have to be hard. So if you want to just calls, you just want singles, that's not me. I'm not your long call guy. I'm not your long put guy. If you want to do that and that's how you want to trade, then go follow somebody else. That's not me. I don't want to pay the premium to have to cover the expected move. I don't want to have to get a surprise directional move to get paid. I want to cover a very small line in the sand and have profit probability be much higher. So I'm telling you, you're in the right place. You probably have to give me some time. Give me a week or two, but you'll see us doing the same stuff every single day. Why is today different? I mean, we have a really interesting read on the day. The tape is telling us crazy negative gamma, high volatility. We jumped up 20, 30% on VIX. So we just have to plan for better risk management today. That's it. But at the end of the day, if the market's going to stay inside this box, even though this is a crazy gap and an ugly adjustment, it's still an efficient day. Market makers are still going to do their job. Okay. So that being said, if I wanted some skin in the game today, I don't like this trade. Okay. But if I wanted to get a trade that I think is somewhat conservative, then I would look at doing, a call spread up here, a put spread down here, and possibly playing some defense. So our sell off on the day, I mean, you can see that what's the market doing so far? We open lower and we're rallying up. So what's the market trying to do today? Fight back intraday. Does it fight all the way back here to 74.70? I have no idea. But if this market fights all the way back and then fails and rolls over end of the day, we might get a great trade where our, $8 credit risking $2 gives us a 4-to-1 opportunity. I'll take that trade anytime. But let's see how price responds. SPX Iron Fly. I did it on XSP. I did an XSP Iron Fly for double ups. I did an Iron Condor for SPX on daily profit play. Both are pending orders. Not one is filled yet. Okay, let me see if this is adjusting, by the way. Now, so this is 7437. I started at 7440, 7433, 7450. Okay, it'll be close. See how this is adjusting a little bit? 7445. I mean, if we pull in $8 credit, this one still has a fighting chance to make a few bucks today. DPP, yeah, 7440, 745. I'll show you the trade. So pending order. 7440, 7450. That's my call spread. And 7290, 7280. That is correct. It hasn't been filled. That's why it says pending order, $8. Max risk is 2. It's a 10 wide spread. I'm trying to get filled for $8, risking 2. I mean, are we going to see price threaten or upside? I mean, maybe, but point is, if we test the upside and fail, I'd love to get filled at $8 credit. You can take the trade right now for $2.30 and risk 770, but it's like, I'm not trying to take high risk today. Okay. because I think if I wanted to take the higher risk, here's where I would set my trade. If I want to take higher risk today, I'm putting my call spread up here and my put spread down here. So if we can sell like a 75.30, I mean, could I get that premium? Yeah, maybe. Let's find out. It's probably not going to offer much. It was a 1 delta when I looked at it this morning. 7, 5, get rid of this. 7530. This thing's offering a 1 delta, 25 cents credit. I'm not taking that trade. Now, if I went 20 wide here and I could get filled for $1 or $2, I mean, if we have enough rip to the upside early in this morning, we might get this thing to offer up $1 or $2. I would take that trade, but do what I did yesterday. Take the bear call spread at a level I think is pretty conservative and then play defense. And also that is recovering all the way, not just to the HVL or the positive negative gamma for the day. That's recovering all the way up to highs from last week. If we came all the way, it's like that's taking out all the structure here, getting back to the intraday highs yesterday. That is a pretty tall order to get to. Could it happen? Sure. Is it likely? No. Not with a 1 delta. That's a 1% chance of prices being above 75.30 today. So I'll do this. If this thing offers up $2, I'm going to go 35 by 55. If this thing offers up $2 credit, I'm going to take the trade. Because I will also play defense there for like 10 or 15 wide to profit trap this thing. But let price come to me. Okay, so I'll take this trade. This will be daily profit play if you're interested. Take it for 2. And then I'll take it for, 18. That means I'm risking 2 to make 18. Same strikes. There's some defense. And if that gets filled for $2, I'm going to put in a broke wing butterfly and play defense. But right now, I'm just going to sit on some pending orders. Okay, if you want that trade, I'll throw it in. This is optional. Bear call spread. Today's the 23rd. 7535. 7555. $2 credit pending. And then same trade, $18 credit pending. If the $2 credit fills today, I'll add a broken wing defense position. Okay. Daily profit play broker says cannot exceed the strike difference. Sounds like that is typed in incorrectly. What's the trade you're trying to take, London? We broke over the pre-market high. Meaning what? We've had enough point movement already. So from opening bell, let me zoom in here. So from opening bell, you can see that little sliver of red. From opening bell, market's up 29 points. I mean, market was expecting 42 to 56 points today between Tasty and Thinkorswim. I was planning on about a 56 to 60 point move one way or the other. The reason my expected move box is so reliable is because it's gap adjusted. So for the upside risk, it's like, yeah, this market could go up 60 points, but we're nowhere near the close from yesterday to go up another 60 points. That's a massive, massive move to the upside. But that's by design. Because if all the market's going to do today is spend the morning fighting, let's say the market is fighting, find structure here and then fails. That price action wouldn't surprise me at all. Are we getting an instant dip, by the way? On look at this. SMH, down 6%. It's just, it's up. Like there's stability right there. I still think this is a three drive pattern. I still think the structure breaks. This is due for a correction. So if it's 1, 2, 3, 4, 5, I mean, I'm cautious. I don't think we make new highs. If we do, okay, great. This is so resilient. But if this is the start of a, move lower, if we break this structure, I think this correction is, again, going to put some pressure on the indexes. You can't have 30, 40% concentration in semis and large cap tech and not see the market sell off, of this is going to flinch. Okay. Lennon, did you get it figured out? All right. So typed in my daily profit play box there, 7472 close. VIX is it 19 still? 19.5. I mean, so we gapped up to intraday high on the VIX at 20.5. I mean, does this get smashed right back down? It's tempting to want to sell some premium. I mean, in fact, let me see what the Ivy rank is really quickly. I might sell some more premium on. Let me see what the Ivy rank is. So SPY 46, Nasdaq. Ugh, I got to sell some premium on Nasdaq. That's just such a high Ivy rank. I got to sell some premium. Nasdaq 719. Let's go out. This is going to be a project options edge trade. Maybe looking at this like 555 low. I've got a 600 by 580 already. Let me check and see where that expiration is. Okay, so the 600 by 580 is out to July. I'm probably going to look at something similar to that, but maybe go out 1 week earlier or 1 week later. That's just such a high Ivy rank. I did this before the SpaceX IPO, and the Ivy rank was like 93 or 95. It was just ridiculous. Let me see what this looks like. So that's only out about 38 days. If I go out August 21st monthlies, let me go July 24th. Look at a similar trade. So March lows at 555. What's the premium there? 555 is a buck. If I go 20 wide, it's not a lot of credit. 15 wide, not a lot of credit. I may have to go out farther than 31 days. Let's see. So I've got the July 31st. That's fine. Let me go August 59. I'll go August 31st. It's 70 days out. This should offer up something decent. If I go 600, 575, this one's not bad. 250 to 255 credit for a 25 wide. The deltas are pretty low. I can make more premium by just selling a put, but I like the ratio spread to build out a profit trap. That gives me a $2,500 profit trap. Probability of profit's 99%, and the Ivy rank is 86. It's going to be hard to sustain that. I get there might be more downside in semiconductors, but is the Nasdaq about to take out March lows? I certainly hope not. So I'm going to try this trade. This is a 600 by 575. Let's try this for a 255 credit. $55 not filling. I'll try 250. Try 245. Okay, get it filled at 255. So new trade in for Project Options Edge. I got filled at 247. I'm going to throw this in my portfolio margin accounts. Oh, come on. 244. All right, got filled. All right, Project Options Edge. Getting a new trade. I've got 2 trades coming. New trade. And number 159. That is a 8/31 expiration. Buy the 600. Sell the 575. Okay, and then I put another trade in MTUM. That was a 250, 230, 225 credit. Okay, 2 trades, MTUM and QQQ. Manish, the tsunami is just a little bit lower. It's a bigger defense level in the market. I'm just taking it because of the gap adjusted move today. So that larger gap down put us essentially below the flashpoint level already, and I don't want to get in it right at opening bell. So I'm not. I'm going to see if there's more intraday pain from the actual price action from opening to closing bell. That's why I'm opting to just go to the tsunami level today. Yeah, I'm fine with that. I mean, again, what throws off my planning is like it's hard to know what the market's going to do when you have a 1.5% gap lower, right? Like I said, I mean, we could have the market. Here's the close. Here's the open. We can spend the entire morning fighting back. We can have the close and the open. The market goes nowhere today. We can have the close and the open. The market sells off more. I don't know. Seems like this is what's happening today. Market's fighting back. Okay. Am I kicking myself for not getting in right away? Not really. You know, I mean, I'm going to play Tsunami. I can take a flash trade every single day, pending orders. We got engineered options got filled. We'll see if those rack up some wins this week. We're playing defense. That's on a cash account, yes. On a portfolio margin account, it's only requiring like $1,500. So it's I mean, it's a naked put. If you're doing a 1-2 combo, it's essentially a cash secured put or naked put. If you have a cash account, yes, it's going to be an expensive trade. The break even on that QQQ trade would be 50. I mean, let me do the math. So 575 minus 25 minus 2.45. I mean, I'd own shares of the Qs at 547. I'll ask anybody that question. The next like 60 to 70 days, if the Nasdaq was down to down to 547. If the Nasdaq was down to 547 and we had a 27% discount, would you be interested in owning some shares? I would. Why? Because if this is a low and we test that low, I mean, this could be a massive topping pattern. But if we bounce back up, we could still get paid on the trade. And then we bounce off the neckline. This also might become support and it goes all the way back to the highs again. I'll just play the structure. If this market never comes back that far, we just have this dispersion trade up here and it's just back and forth, chop suey, but we still break to all-time highs, that trade gets paid. 57 on a margin account shouldn't be the case. It should be like 5 on a margin account. I'll take the same trade here. QQQ. On my margin accounts, this is similar. This account's a standard margin. $5,908. So there's no way it should require $57,000 unless you're overlapping strikes. We already talked about that in the 2 or 3 master classes that I did, Manish. Look, I'm doing. You see the trade. I'm doing the exact same trade. This is my cues that I got filled on. Portfolio margin requires. Here's the portfolio margin. 1492 in buying power. Here's a standard margin. $5,900 in buying power. Here's a cash account. $57,000. That's a cash account. I'm not going to take that trade for a cash account. Margin, sure. Portfolio margin, yes. Cash account, no. Not right now. I'd rather just buy the shares. So you're getting a price that is a cash position, not a margin position. Are you trading on margin already, by the way? Have you run out of option buying power? Because, I mean, technically there's no leverage when it comes to option buying power. So if you've exceeded that buying power, that could also be why it's showing such a high, high reduction. So anyway, you can check with the broker on that. All right. I'm going to get the updates in for Project Options Edge. Update the tracker. Got a few more trades to add in. So it left off. Trackers at 152. Oh boy, I've got a lot of trades to add in. So that was QQQ 152. We have some nice winners this month. We had a winner on DraftKings, winner on HUM for Humana, winner on IWM last week, Workday last week. We took that winner on CBOE, which is nice. By the way, what's that thing doing? Back up to 263. Our break even on this one was 258.50. This would be the repair that I talked about. Yes or no? Again, we talked about this, at length of Project Options Edge. If I took the assignment, my break even would be 258.50. We're already up $5. That's turning a losing position into a $500 winner. That's what's nice about having a plan A, plan B, plan C. You'd be profitable right now. If it gets called away by the end of the week, great. You probably lowered your cost basis another $4 or $5. This could be up like $1,000 if it stays above, 260 or something. So I didn't think it'd be difficult to repair. It's just it was a really aggressive sell-off. All right, what else? Workday. We had a winner on this one. It was a 110 by 105 ratio spread, full profit last week. All right, I need to get caught up here. So 153 IWM. Add these in. 153 IWM. That trade was taken on the 12th. Okay. 154 was SpaceX. That was also taken on the 16th. For $36 credit. $155 JP Morgan. That was the 17th. Okay, another trade on SpaceX, 156 in our tracker. That was taken on the 18th. Couple more. 157. SMH. All right, then you have two more. MTUM and QQQ. It's the 23rd, QQQ, August 31st. Uh, 2.45 credit. Okay. Tracker's updated. Telegram's updated. Okay, where are we at for the day? Market's fighting back all day. We coming back to gap fill, possibly. 7472 was a close yesterday. This has been, I mean, if we moved beyond like the 50 points, market from open to now is up about 47 points. Keep an eye on like 50 to 60 points. That's the market maker move. Are they gonna defend this? This is, I mean, 50 points is not that far away. That's like 74.15, 60 points on the day, around 74.26. Not that far away. It didn't fill, Manish. Have you watched the core strategy video? You're setting a pending order. It never got filled. 265 was not filled today. Flashpoint and tsunami levels are pending orders every day. They didn't get filled. Had you followed the flashpoint signal, you probably could have had a debit that was accurate today. I just didn't take the trade at that level because we were at it. Like, look at the level today. Pain price on flashpoint, 7386. Where do we open today? 7364. So the pain point for the flashpoint was hit. If I got in that trade, I'd be profitable right now. Why did I not take the trade? If there was any more pain to the downside, I didn't want to sit on a flashpoint level. So I opted to just take the tsunami level. So that's on me. If I don't get the trade and it doesn't fill my tsunami trade, so be it. But the pain point here was 7341. We never came down that low. 6.4. So I needed price to drop another 20, 30 points today to get filled, and I'd see if this market responded. But instead, we responded instantly to the market going up. So the tsunami order didn't get filled because we needed another like 20 to 25 points of pain. We didn't get it. So we'll see what happens on the day. I'd like to see how the pending orders are shaping up. Anything on pending? So right now, that 20 wide, 70, it's offering 0 credit. It's offering 10 cents. What's this one here? Yep, the tsunami order never filled. The $8 credit on the Iron Condor is trading for 325. So if we get like more direction to the upside, we might get filled. If the market tests like 7460, 7470, we might get filled at a low risk Iron Condor today. See if the market like settles in all morning where it's buy that dip, 0 DTE. Like, you got to give the market credit, man. A market down 1.5%, and it's like, we're going to be just going straight up for the day. We'll see. The market is still negative gamma below 7,500. 7,500 is a key level for the bears. If the bears continue to defend and this market is going lower, 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 staying below 7,500 is where the weakness window is. Okay, how's our XSP sitting? So this one, it has a fighting chance. This one's in the way of my expected move box, but I'm obviously setting a credit that's much higher. And then XSP, we're getting the Iron Fly trading around 650. Somebody mentioned earlier I put it in for $8 instead of my 12. It's like I would consider adjusting my trade to maybe 10. I risk in 5 to make 10. I would consider that, but I put it at 12. So I'll monitor this one for the morning. Let's see how our engineered option trades are faring. So we got a couple more fills. So this is a EGO. And this is a defense level. So I have my participation level. We got filled at that break-even price for 73 cents. So this one's actually in profit. I mean, call me crazy. If this is accurate, where I could close out for like, I was going to say, if I can close out the break-even in the weekly or the break-even in the defense trade for like over $100 and take like a $20 loss on participation, I might just take the profit. It seems very early on a Tuesday to do that, but we'll see. So anyway, I'll keep an eye on that one. That was just a really generous fill to get filled at 73 cents, only risking 27 on that break-even trade. I mean, that's why I give you those levels. And she's asking about, understanding the levels. Is like, that's why they're in here. That's why they're in the alert. In order to get your levels to fill, typically, we've got to be close to triggering that pain point. This is a dealer, gamma, max pain, stability, ATR, volatility combo. All these things calculate out. So that's how I get these pain point levels. And once they're breached, we typically get a fill, and we're trying to get our lower debit. This is just above a 1-to-1 risk, but the probability of profit on a tsunami order is over 90%. And we've seen the last couple of years our probability of profit on a flashpoint's like high 70s. I like the trade. As far as management wise, like these trades net out to be a 1-to-1 or better with a 70+% win rate. Like mechanically, it's a very, very good trade. Okay. So I will sit and chill and hang out with some pending orders on SPX. Let's go through some Telegram here. So just a quick update. Flashpoint, no pain on the day. So my tsunami, pain was opening bell, but there's no intraday pain, right? Intraday, the market did nothing. It opened and it started to rally immediately. This market isn't done yet. This market still may come down and retest the opening bell level. This might still go a little bit lower and force fresh lows on the day. And I accept that. So I'm going to keep my pending orders in. If the market continues to fight up, but it can fade into the end of the day, we might find ourselves in a good position for a higher reward and low risk trade on daily profit play, possibly even our XSP double up. Right. So what do I have today? Still pending order on Flashpoint with the tsunami level. Daily profit play, pending order with a low risk, high reward Iron Condor. I also put in that optional bear call spread where if this gets filled for $2, it's 20 wide. There is a lot of risk there, but I'm playing defense on it as well for probably $10 to $15. And that probability of profit would be up above my gap adjusted move. I don't think the market's going to be able to take out 7530 today without the help of Donald Trump. So do I think that he's going to instantly tweet today? I have no idea. But again, likely this is a tough move to get to. This would be taking out the highs from yesterday. I could see us maybe testing the gap level, testing HVL or the positive negative gamma, but stalling and rolling back over. Okay, we'll see. The market's already up past the expected move, by the way. This market is already up 54 points. That's beyond tasty. That's matching Think or Swim. So let's see if the market's going to respond to that, or it's just like, nope, just keep fighting back, just keep fighting, fighting, fighting. Maybe it's filling the gap. But I mean, this look, the 5 minute chart, 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 10 candles in a row, green. That's amazing. I just hope that when it goes up here, it stalls and then rolls over. Because if we can get filled, we got a good chance to manage some profit today. But more importantly, is I want to get filled. Okay. What else? So pending orders on daily profit play, pending order on double ups. This is going $15 wide and asking for $12 credit. I may settle, maybe I might settle for $10 credit, which means I'm risking 5 to make 10. I will keep an eye on this one. Right now, this is trading for like $6 and change. We're trading for almost $7. If this is offering 10, I might be willing to take the trade and calculate out like where is that break even. If I take $10, that means my break even is 7460. Or I'm sorry, 746. Do I think that price can stay below 746 today? That's the equivalent of 7460 SPX. Like I will try. So I'm going to let this one hang out. Keep an eye on this one. If this gets over $10 credit, I may adjust it. Except that, risking 5 to make 10. But 12 is risking 3 to make 12. Okay. We'll see if the market responds to that calculate expect to move. From open to current, market's gone up about 59 points. I had 56 written down today from Thinkorswim. So you're right there. See if the market responds to it. Like this isn't by accident. All right, what else? So Flashpoint, daily profit play, double ups, engineered options. Filled on these levels. We had two fills today, right? Participation filled yesterday, 2 fills today. And we'll see if the defense kicks in again, if it goes any lower, or if this is going to be like our mark of the week and it just kind of fights back, we might, carve out some profit by the end of the week. Lastly, I think Project Options Edge. I just updated that one. I didn't realize I was behind 3 or 4 trades, but Project Options Edge is here. So these are all trades from last week. SpaceX, IWM. Here's some winners from the 618 expiration. New trades added for IWM, SpaceX, JP Morgan, SpaceX again. This is January versus out to 2028, and then SMH for semiconductors. New trade in MTUM, which is a momentum basket, and then Qs because we have like an 85 IV rank. Just selling some premium. Are all options going to require margin accounts? No. I mean, if you trade defined risk spreads, look, all these trades I took here, this $12 trade in XSP, I could take this on a cash account too. I could take this on an IRA account. It'd be risking $300 to make $1,200. My trades on Flashpoint, I'd be risking like maximum debit of like 240 or 260. So, I mean, the Project Options Edge trades, margin accounts are probably better suited for that. Ratio spreads, I mean, again, I showed you the difference. If I go QQQ and show you, I'll show you the difference. So QQQ filled, this is a trade I just took this morning. A 600 by 575. This is a built out trade that is a $2,500 profit trap with a naked put at 575. Not true. I mean, the broker, based on your permissions, you can have an IRA account and trade whatever options you want. I have IRA accounts. I can trade futures options. I can trade index options. I can trade 4-leg spreads. I can do whatever I want. Depends on your broker. So if your broker is restricting you, there are brokers that don't. But yeah, the brokers tell you you can't trade spreads on a cash account. Well, IRAs are technically cash accounts with no leverage. There's no margin, but you can trade 4-leg trades. That's a spread. A butterfly, a 3-leg butterfly, a 4-leg iron butterfly, an iron condor. Those are 4-leg trades. That's a spread. So it's misleading when they say you can't trade spreads in a cash account because you can based on permissions. So when I hear cash account, I think IRA. I think retirement account. I have permissions to trade however I want. I can trade futures and options. I can trade oil and gold, contracts, futures. I can trade spreads, 2, 3, 4 legs, whatever I want. But that's permissions. It's called the works in Tasty Trade. Yep. And Walt says I trade options with margin in my IRA. I don't know how you do that. I don't know how you have an IRA account and they give you margin. That doesn't seem very compliant to me. But point is, yeah, define risk. All right. What else? Limited margin on Schwab IRAs. Okay. So the markets fought back pretty respectively. We were down 1.5%. It's cut that in half. Now the question is, are we going to continue to see fight back to this gap fill? Let's take a look at our gamma profile before we go today. I think we have a daily profit play is our live stream this morning, and we'll fire that up here in a few minutes. This is my updated gamma for 0DT. Like I said, if you saw that post I did yesterday in Telegram, that was this morning at SMH. The market caught a bid right away. Here's the post I did yesterday. This is kind of the key move to the end of the quarter. So end of the month, end of the quarter is next Tuesday, and we're below 7,500. Today we gapped lower, so that pressure is there. The bears still have control of this volatility regime below 7,500. So you can see my comment on the bottom. I discussed summer seasonality, offering up choppy rotation, potential tail risk, 5, 10, 50% corrections for a myriad of reasons. We climbed the wall of worry. The AI trade is not what it once was. There's too much circular financing, blah, blah, blah. War is going to persist in Iran. Who knows? If the market absorbs a correction in organized fashion, key support is 7,200 and 7,000 for SPX. Look at the previous all-time highs in Nasdaq as well. I'll still tackle the market's day-to-day with 0DT structure. That's what we're doing today. So today's market structure, 0DTE, this is our positive gamma, 7490. Are we coming all the way up there today? I don't know. The gap close would be 7472. Are we coming up there today? I don't know. Do we have a sticky level here? It's not huge. We're negative gamma, so I don't like to just say this is the best butterfly spread. 7,400 looks interesting. Doesn't mean it's a high volume number to pin. No. So I'm not going to force a butterfly spread. Okay. If this gets over 100, I will most likely start looking at a butterfly spread. Did I play a pin price yesterday? No, because I did the replay feature. Did you watch that replay? Tom, are you following me in the morning prep for Tanuki Trade? So I do a morning prep session with Tanuki Trade. I'm ambassador for them. I got affiliate link stuff. I do a morning prep session at 8 a.m. Eastern time. Yesterday's replay, the market was super noisy at 3 p.m. The 7475, 7460, all those levels lit up at the final hour. It was hard to decipher and say 7475 was the clean winner, and they were all around 40 to 50 million volume. So it was, yesterday a pin at 7475. I know Kane had one for bullseye. Very, very lucky result, just because I didn't have a clean read on that for the day. Again, 7,400 looks attractive today, but this is not a big volume. This is only 40 or 50 million. So this does not stick out enough to say what's to stop this market from coming back to 7,450. And all of a sudden this grows to 30, 40 million. And then we're staring at a potential pin here at 7,450 and one at 7,400. I have no idea, man. But if you remember last week, the 7,500 pin, that thing was sitting at 100 all morning. And it went from 100 to 120 to 140 to 180 to 220. It pinned 57 cents away at the close. That was a sticky pin price. So that tends to be how I read these butterflies. It's give me something that's a little bit more obvious with higher volume. And that is a better candidate for me than these 30, 40s, and 50s. So I'll let this develop. Sometimes you got to let the day evolve, Okay. All right. Let's kind of wrap it up here. Any questions? So pretty busy morning. We engineered options, had some excitement. We got filled on a couple positions. Flashpoint, like I said, I opted to, bypass the trade. That's on me. I could have just taken the flashpoint right away. What was that flashpoint on SPX this morning? I've got to ask if anybody's in my Flashpoint, did you take the trade this morning at both levels when it came out? If you did, you're probably seeing profit because what was the strike? Let me go Flashpoint. The strike for today, I guess not. You're up. And this is another reason I didn't take the trade. You need price to basically, I mean, it's showing appreciation, but it depends on how cheap the debit was. This could have been a very cheap debit, and maybe it's showing better profit. But 7425 is actually above current price. So, I mean, on a positive note, the market came back, but because this was a gap to the downside, it pushed us right to the Flashpoint level. And if there was any more intraday pain, it's like I would just be taking a lower debit and a lower probability trade. So I look for the intraday pain this morning to get that tsunami level fill. It didn't fill, but the day isn't done. Romel, it's if you're Tanuki Trade, if you're a Tanuki Trade member, you'll get the link every morning. So I mean, I have the ambassador link. I can save you 10% on a yearly subscription. It's like $450 through me. But I use this thing every single day. Like this is my visual roadmap. I use this every day. You can send me an email, chrispulver@gmail.com. If you have Tanuki Trade, you get this stuff every day. Yep. And by the way, like this is cheaper than most. Like I have another zero DT package that was built for me that's $935. If you ever heard of Brent, his name is Brent Kachuba. He's with Spot Gamma. He built a Spot Gamma dashboard that's pretty cool. There's Hero, there's Traces, all sorts of crap. He's on YouTube all the time. He's got a great software package, but it's like $3,000 a year. No, thank you. It's not the crystal ball. Like this is as good as a roadmap as I can find to prep for the day and plan good levels. I mean, this is how I'm finding our levels with daily profit play. This is how I'm finding my levels with my pin prices for double ups and butterflies. This is how I'm basically letting my zero DT trades work through the day. I need this. And this is $450 for now. Price can probably go up, but still, 450 is a great value for an excellent like gamma reading. Cool. So if you want that, through me, then send me an email, chrispulverpub@gmail.com. All righty. Yes. So you get it's a 10% off annual. So it's usually $500 and you get it for 450 or 455 with me. And then you have my morning prep. I get recaps every day. Like, I'm building out some education for them as well. I'll do some zero DT master classes. Like they're bringing me in under, they're a great team to work with. I talk to the developers, every week. They've been a lot of fun to work with. They're really open to feedback. They're adding more and more features to this the expect to move stuff. They did that because of me. The dynamic levels here, they're going to start kind of intensifying the colors once we cross 100 million in absolute gex. We'll start intensifying this color. So it shows it's more of a viable pin candidate, like ways I've been kind of trading zero DT. So they're very open to feedback, which is nice. My Twitter every morning. Yeah, this stream should be on YouTube and should be on Twitter and LinkedIn and Facebook and all those sorts of other places. I'm live all over. That's what's nice about Restream is you can push multiple channels. All right. So what do we do in the news today? 9:45 PMI. Nothing really crazy happened. All I'm seeing this morning is the market essentially fought back the expected move. So we opened here, fought back the expected move. There's 59 points. I had 5609 written down on Thinkorswim. I had 42 written down for Tasty. I'm taking the higher of the two. Tanuki had right around 60 points. So we have stalled there so far. And I would say the day is going to give us one or two things. Either we come back down to revisit the same opening bell price, or we continue to push, pause, and then push up again and try to fill this gap. And I'm hoping if we fill the gap that we roll over by the end of the day. Because if we are up here, we have that low risk, high reward double ups. We have that low risk, high reward daily profit play. That would be an excellent, high reward opportunity if we get filled and we get the market to respond. So we'll see. Okay. And if you want to keep an eye on, momentum, there's a pretty big gap in momentum. Yeah. Momentum MTUM, which is a basket of mostly semiconductors, because that's what's high flying. This thing is down at one point, it was down about 5%. It's down about four and change right now. You look at SMH, caught a bid this morning, but a pretty sizable gap lower, almost 5 to 6% lower. So we're trading around like 6.5% off the recent highs. It's still impressive that it's still this resilient, but I do think based on the technical kind of XABCD pattern, like XABCD, or this 3-drive pattern. If we break that structure, here, we're likely due for an ABC correction. I'm looking for something at the 50618 zone to get into defined risk. I'm trying to be patient at SMH. It makes me feel like an idiot that I've got to sit here and watch this price go higher, 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 higher. It's unsustainable to see a parabolic move not have a correction. Okay. In fact, give me any example in the history of trading that shows a parabolic move that hasn't had a correction. We're going to have a correction in SMH. I don't know if it hits 1,000 first or if we pull back now based on a 9-10 week run. If you look at the weekly chart here, this has had a heck of a run. You know, we had that huge rip to the ups, and not to mention that, like from this low back in April 2025, this has been just absolute gangbusters from Liberation Day last year. 300% in SMH. But it was like crazy town the last, couple of months. April and May, this thing absolutely was on a tear. All right. Any other questions on the day? Busy morning. So let's fire up some daily profit play, pending order, waterfall income. We have pending orders in from yesterday's live session. Double ups pending order for today. Pinch point. I'll take a look at the scanner tomorrow for watchlist Wednesday. Engineered options. We are still in. Participation is filled. Break even is filled. 50% defense is filled. Flashpoint. I just did the tsunami today pending. Project options adds new trades. That's it. Members got some action this morning. If anybody's here for the first time, where's the guy at? That wasn't Keith. Who was my Keith? Was that you today? Who was Keith that said, good thing I didn't buy this stuff and I gave you hell for a second. Again, you can see the same 500 to 1,000 people every single day that come back and trade with me. And this is a good community to be in. But if you're looking for long calls only, you're looking for, one scanner to find 100 different signals to trade, it's not me. I will spend all my time prepping on indexes and efficiencies because this is how I make a lot of money. And yes, I have to plan like up, down, sideways. I got to plan for kind of anything, but we do it every day. Lawrence says today's my first time. Well, what do you think, Lawrence? I know it's drinking from a fire hose. I know if you have zero options knowledge, this is over your head, but I'm not trying to make it that way, right? You have to understand this is a trading session in addition to a teaching session. Trading requires some button pushing. Trading requires that if you can follow your broker platform, you can issue this trade because you know that there's my calls, there's my puts, there's my expiration, there's my ticker. You got to be able to follow that stuff. If you can't, okay, fine. That's a little learning curve. That's the prerequisite. Learn how to navigate a broker platform, paper trade it, get comfortable with Thinkorswim, get comfortable with Tasty Trade, whatever you're trading. Have the right permissions to trade options so you can do a defined risk trade for 2 legs or 3 legs or 4 legs. If that makes no sense to you whatsoever, guess what? One Trade Mastery, free session. Options Whiteboard, free sessions. Anatomy of a Trade, free sessions. Options 101, free sessions. Check them out. Okay? When you want to trade with me, yeah, people pay for my services. But if you want to get up to speed and hopefully get up to speed quickly, let me break it down in a very detailed hour-long education session. Not in a 30-minute intense prep as we go trading the live market in 0 DT. That's a lot different. That's very much an intense live trading. I move quickly because there's a lot of decisions to make. All right, JD says, been watching you like every day for my first month. Awesome. Waterfall program, how long you hold in capital. So it's defined risk, Tim, but those trades vary anywhere between like 45 and 90 days. Free sessions here, I'll give them to you. So if you're in YouTube, check it out. If you're in Zoom, check it out. One Trade Mastery. If I have anybody brand new, One Trade Mastery, free 70-minute session. It's coming in. Links coming in hot. So here is One Trade Mastery. There's a Vimeo link. Here is One Trade Mastery. I don't think this is going to post actually. Oh, it did. If that link works in YouTube, great. If it doesn't, it's probably because it's too long. You can also send me an email, chrispulverpub@gmail.com. I'll send you these links too. Options Trading Whiteboard. This is a YouTube session. Options Trading Whiteboard. And the reason I'm bringing this up is because any that comes in and just throws out some negative comments, it's like, look, man, give it a chance. Here's some free education. Okay, it doesn't work. That's fine. Send me an email. Option trading whiteboard. Okay, that's in Zoom. This one should work. Options whiteboard. That one should work. Anatomy of a trade. That's a YouTube session. That one should work. Anatomy of a trade. That one should work. So if you're new, all I'm saying is give it a chance. There's a reason I have 500 people, 1,000 people watching this stuff every single day. They come back because they know that this is real trading. This is real trading. Every trade I take in all these services is live capital. There's no demo accounts. My last demo account was 2006 in forex. I've been trading live for 20 years. Okay. So do I trade huge and small and take these massive swings? And do I have Lamborghinis in my driveway? No. I'm just a real trader trying to make some money. You know, it's like the markets are not easy. Anyone that tells you this is easy, they haven't traded very long, or they've never experienced a downturn. They've never experienced a bear market. But if you give this stuff a chance, I think if I can turn you on to some options education, it will open your eyes to trading the markets like 4-dimensional. It's like playing chess versus tic-tac-toe. Okay. Why? You understand the risk reward, where price has to be for you to make money, where price is at for you to have risk, what your maximum risk is, what your max reward is, and you build trades. You basically have a sandbox to build the trade. That to me is fun, because if I can come up with a trade plan, I can then set my reward and risk to my favor or however I want. And there's always a trade-off in option trading. If you want a high probability trade, you're typically going to have to take higher risk to do it. If you want a higher reward trade, you're probably going to sacrifice some probability, but the payoff and the risk management is in your favor. There's always a trade-off. Okay. All right. So, and again, maybe I'm doing all this for a trader that already left. I don't care. But all you that are here for the first time, watching me for the first couple of weeks of the first month, it's good to know this stuff. I have plenty of free education, plenty of stuff to give you knowledge, information, foundation. Why? Because this is how you crawl before you walk, before you run. Okay. I didn't know how to trade options. I learned how to trade options in like 2011, 2012, when I'm just trying to protect my portfolio from a great financial crisis. And that evolved into, you mean to tell me that I can build trades where I don't have to own a single stock and I can make just as much money, maybe more, and put way less capital at work? That's options. You can build trades. It's a sandbox, up, down, sideways. Okay. What's nice is for these services, they don't overlap. These are all very different strategies. Offer me kind of this whatever it takes portfolio. I have high probability, high probability, high probability, high probability and defense 1-to-1, high win rate, great volatility scanner on pinch point, by the way, trading earnings, intraday defense and 0 DT flows. We get paid in a 2-day window. It's mechanically, it's one of my best mathematical services that I've created. We have a pending order every single day. Doesn't always fill, but when it does, we've been winning like 70+% of our trades, which I love. Double ups, high reward, low risk. If I'm going to start anybody anywhere, understand you can trade every day with me in daily profit play, and that's great. But the risk is typically higher. That's the trade-off for winning 90% of your trades. You're going to take more risk. If I take this strategy, which is around a 65% winner, but my winners are 2, 3, 4 times what my risk is, this is one of my best ways to grow an account. So I said this before, I love high win rates. I'm very competitive. I don't like to lose. All right. But do I accept losses? Yes, because I'm not perfect. And no trader should tell you they have a 100% win rate, because they're lying. I traded for years without taking stop losses and managing trades and sitting in drawdowns, and I'm like, I never lose. It's exhausting. Just take it a fine risk loss and go find another trade. It's a lot better. You are closer and closer to a better trader if you understand that risk is a part of the game. Take defined risk and it's fine. Double ups, Some of our winners we've had in the service, 200% win on risk, 450% return on risk, 800% return on risk. 8 times your money in a single day. That can happen. 5 times your money in a single day. That can happen. There's no better growth strategy than double ups. So even though this has less trades and a lower win percentage, this is my biggest portfolio gainer by a lot. My double ups right now, let me see what the total is. I think my daily profit play, which is logged over 650 trades, we're at like 111,000 in that portfolio. And then double ups, we are at $173,000 with only 156 trades. So a fraction of the trades, but way more bang for your buck as far as growth. So it's not an overlap. I don't cannibalize my strategies. I'm trading this all with real capital. I can't cannibalize my own strategies. I have to make sure that I fit things in that make sense where it's like I can still take that trade. I can still follow that trade. I can still follow that mechanical setup. Okay. All right. Sarah says 100% win rate from 2023 to 2025. Then forex range broke out. Well, took some big losses. Same thing here. I dollar cost average into forex trading from like it was. I'm trying to think when my perfect storm was. When I had. That's not. I'm not talking about my robot that I built. I'm talking about literally like my lightning in a bottle type strategy. I grew my account from like 25K to $200,000 in like a year and a half. I thought I could do no wrong. I never took losses. I dollar cost average into everything. I was trading, half a standard lots, building up trades, making thousands of dollars every couple of weeks. And then I was hitting some huge, huge gainers. I was, winners of like 10, 15, 20 grand on like 5 lot trades. Now, what's crazy is after I had grown to like 200K, I didn't necessarily get comma shock, but I had enough money that I'm like, it's kind of silly to trade bigger. So I kept the trade size pretty consistent with like less than a standard lot, scale into things. And I ended up sitting in that it was in 20, it would have been 2014 would have been my drawdown. So everything was perfect in 2013, 2014, 2012. I made a lot of money on the carry trade with the yen. They look at those yen crosses. I think 2012, the market was down to those crazy, like all-time lows, and they all ripped up like 6 to 7,000 pips. So that was a really good year. 2013, 14 was an extremely low volatility window. And I traded everything for like pivots and pockets and efficiencies and made a killing. 2014, when the dollar broke out with a massive surge, the dollar was strong for like 6 straight months, and the markets were very, very inefficient, and the volatility like doubled, and it stayed that way for like 6 months. I was nursing like a 20% drawdown, but I didn't lose. I fought through that drawdown, fought tooth and nail. I got caught in the Kiwi dollar for like 6 months, and I was down, $20,000, $30,000 on a 200K account, and I fought through it to make $500 profit. $20,000 at risk to make $500 profit. How'd that feel afterwards? The amount of relief I had when I made $500 was embarrassing, but it's like it was true. But the lesson was, holy shit, I can have a drawdown. This strategy isn't perfect anymore. What happened? And I reassessed everything. So I started to trade smaller. I started to be more patient. I let levels come into me. I followed the overall trend, and I was more conservative at that point. But I tried to then just go back to like, man, that would have been one, and again, if you've ever traded Forex and you've seen a flash crash, I was literally one flash crash away from losing, 50% of my account. And what's interesting about that lesson in 2014 is 2015 was Swiss National Bank. 2016 was Brexit. 2018 was oil. 2020 was COVID. Had I not had that lesson in 2014, I probably would have blown up my account in 2015 or 2016 because we had massive volatility and crazy flash crashes. So I consider myself very, very lucky that I, never did blow up an account, but I've had some ugly drawdowns in my career. But from that point, that's a decade ago. From that point, it is why I keep screaming at traders. It's like manage risk, manage risk, manage risk. Because if you don't manage risk, the markets will manage it for you. And it's probably not on the positive side. Markets will manage your risk by blowing up your account and by you taking massive losses. And you're like, what did I do? Traded too big, had no plan, had no backup plan, had no stop loss. Massive risk. Okay. So it's not fun to be unglamorous and not like, oh, this guy only makes like a couple $100 a day or a couple. Yeah, who cares? It adds up really nicely. If you piece together $100 a day, $100 a day, $100 a day, $200 a day, $500 a day, it adds up really nicely, you know? But if you put the risk behind the reward and you want to put profits first, that's fine. But a lot of traders are blinded by profits and pay no attention to the risk it takes. And that's my only PSA for trading is if you don't think about risk, you're not really a trader yet. Because you can have a hot streak and you can have all the success and you can make a ton of money in a short amount of time. But it's how resilient is your strategy and how resilient are you when the market doesn't do what you think? How good is your risk management when the market's not doing what you think? That's the testament and the signs of like, okay, can you survive when the market's not perfect for you? And that's not easy. And that takes reps and that takes time in the market. That takes experience. And that's the not easy part. Okay. All right. You got it there, Pete. Thanks. ChrisPulverPub@gmail.com. So, Tim, you got that? All right. Cool. All right. What else? Let's wrap things up here for the morning. I appreciate all the comments. Again, I'm not doing this stuff fishing for compliments. I appreciate the feedback. It's more like for the occasional new person that comes in and it's, maybe it's over their head to start, right? Maybe it's over their head. I get it. But I'm also not dumbing down my service. You're not dumb. You're all very smart. You're all very capable. You're all willing to learn stuff. You all should learn stuff. I learned this stuff. Now I have a strategy mix that I trade every single day. Okay. So you can learn it too. And I want to teach you these strategies. I want to teach you how we trade, define risk trades, build a sandbox that you can trade up, down, sideways. To me, that is a much more dynamic approach than what do I need all the time? I need crazy direction to get paid, or I need the markets to always go up to infinity. That's not real. It's been the easy trade for a long time now. We've had a decade plus of bull markets, and we've had corrections, yes, but it's been buy the dip, buy the dip, buy the dip. It's now like the mantra. But we do have some volatility ahead, and we most likely have a CapEx bubble, a secular bear market, and a fourth turning coming in the next 5 years. That's not going to be fun for anybody. But if we can survive it, we can probably come out very, very profitable. And, that's the most important thing because it's probably coming whether you like it or not. It's just we got to be prepared. Okay. All right. So there's my PSA for the day. I appreciate everyone being here. Comments are awesome. And the reason I also bring this stuff up is when we have new traders in the chat and if they're, posting for everybody, I appreciate all the support that I don't catch those comments all the time, but I appreciate the support when it's like, just keep people in their lane. It's like, if you've never traded with me, if you never traded with this community, you have no idea what we do every day and you have no idea what we're capable of and how well we're doing. So I get a little offended when people come in and they're that quick to judge and they're that quick to troll and they're not even giving us a fair shake and know what we really do. They're not willing to peel back the onion, so we grind and that's trading. All right. Where's price at for right now? We rolled over a little bit. Futures wise, we are flying back. So we just tested the daily VWAP. Nasdaq, tested and rejected. So, again, interesting price action, all based on futures flows overnight. Sold off a ton. We'll see what the day gives us. If there's any intraday pain to the downside, we'll see if the market goes lower. We could still get filled on at tsunami level today for Flashpoint. We'll see. If the market's going to try to fill this gap at all by the end of the week, we might have some net winners coming by like Thursday, Friday, or Mondays or expiration for hedging options. We'll see what the market gives us by the end of the month, end of the quarter. Okay. All right. Deanna, sorry I went so long, but can you fire up some daily profit play? Okay, cool. All right. Thanks, JD. Thanks, Jez Global. Thanks, Lawrence. Pete. Always nice to see everybody. Tim, thanks for being here. All the new traders today, first week, first month, first day. I appreciate you being here. That doesn't go unnoticed, but we have a great community every single day. So I've been fortunate that financial education for the last now 13, 14 years. I've had traders that have followed me since that start and have known me for a decade plus and still trade with me and follow me from this company, this company, this company, all these different. I'm working for like 6 companies right now. I'm out there, but I'm sitting here at my desk every single day trying to make a buck, trying to help traders. Hopefully we do it together. All right. Good stuff. All right. Appreciate that, Rudy. I mean, I love that. Consistently profitable. That's awesome. Like that breakthrough is just a super important. That is a super important level to get to and just start building the confidence. But like I said, just don't put reward ahead of risk. Think about risk because when you manage risk, the upside is actually pretty straightforward. It's not easy, but it's straightforward. You can make money in this market. If you manage risk, you can make money. But if you don't manage risk, it will emotionally scar you. It'll scare you away. You'll have traders that will never come back because of that one fateful day, that one terrible trade, that one stupid event. I mean, you could blame the market, but if you don't manage risk, you're just going to blame yourself. And like I said, the market will manage risk for you. And usually, like I said, manage your risk in the market side is you're blowing up your account. And nobody should have to go through that. Nobody should, oh, I'm now a trader. I've got a blown up account badge of honor. It's not how it works. Keep your capital. It's finite. Grow it. Nurture it. Sorry. Anyway, I'll let you go. Okay. Good stuff. Thanks, Tim. Thanks, Lawrence. Which training videos do you cover risk the most? Honestly, there's literally like a risk management 101 video somewhere in there. Just type in like trading 101. There's going to be risk management videos. And it's pretty on the nose. It's like rule number 1 is don't lose money. Obviously, that's not the easiest thing to do, but it's all about just trading smaller, not letting the emotions make you take bad trades. So you can find stuff on there. We manage risk every day in this live session because we have defined risk trades. So look, I mean, I told you every trade I took today. I mean, I'm risking as much as $1,800 on my daily profit play bear call spread. It may not get filled today, which is totally fine. But if it does get filled, I'm going to play defense to hopefully limit that downside risk. And then the rest of them set up today for hopefully higher reward than risk. And we'll see what happens. All right. Michael says, where's your community? It's here. I mean, it's on YouTube, Michael. I can see your comment. It's in Zoom. We're all over the place. Yeah, send me an email. Manish, yeah. Send me an email. If you want the Tanuki trade stuff, send me an email. So this web app, the live chat, charts, that morning prep that I do at 8 a.m., just send me an email, chrispulverpub@gmail. And yearly, I can save you 10% on the yearly, and you can prep with me and recap with me every day. Cool. All right, I'll send you that. All right, let's fire up some daily profit play and look for some Telegram updates later.